Hello, this is Mike Holla from Michael E. Holla and Associates with an educational economic update for November 2018. In this month's video, I'll discuss some of the major headlines that influenced markets in October. I will also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. October is often a spooky time for the markets. Historically, it's the most volatile month of the year. Some of the largest crashes have occurred in October also, including 1929 and 1987. The most significant sell-offs during the 2008 meltdown also happened in October. This October's results reflected the month's rocky reputation. The S&P 500 lost 6.9%, posting its worst monthly showing since 2011. This performance led to $1.91 trillion in losses. Similar struggles occurred in other domestic indexes and worldwide markets. The Dow gave back 5.1%, and the Nasdaq dropped 9.2%, its largest monthly decline in nearly a decade. Plus, global equities had their worst monthly performance since 2012. So what happened last month to cause these declines? Seasonal volatility may be partly to blame, but settling for that explanation doesn't give you any insight into what investors responded to last month. The volatility started at the beginning of the month when Federal Reserve Chair Jerome Powell indicated that interest rates will continue to rise. However, increasing rates were not the only concerns on investors' minds in October. Ongoing trade tensions and questions about U.S. corporate profits also affected sentiment. In particular, several major tech and internet companies experienced large price drops after releasing their earnings reports. These stocks can attract investors who are chasing results, so both good and bad news can drive large price swings in their prices. Thanks to many companies' positive earnings results, however, October ended with upward momentum. By the end of October, the estimates indicated that the S&P 500 companies grew 26.3% during the third quarter. In fact, investors started to buy back the tech stocks that sold earlier in the month, helping to erase at least some of the U.S. index's losses. Markets closed the month with 2 positive days in a row. What happens next? Going into October, market fluctuations could continue for a while. Questions about interest rates and the global economy remain. Midterm elections are also going to affect investor behavior. But the economy seems to be moving forward. The Federal Reserve recently said we were in a remarkably positive moment. Behind last month's volatility, we also learned that the economy had solid growth in the third quarter, and the labor market remains strong. As always, we will continue to focus on the economic fundamentals rather than letting dramatic headlines sway our long-term goals. Well, that's it for this month's Educational Economic Update. Once again, this is Mike Holla with Michael E. Holla and Associates, signing off for the month of November 2018. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 920-686-7526. We'd be happy to talk to you.